Hello and welcome to CMS Forex News. I'm market analyst Nick Nassad. Today is Wednesday, April 8th, 2009. The Aussie-Yen pair fell overnight as stocks in Australia and Japan declined in the wake of a bigger than expected loss from U.S. aluminum giant Alcoa, which acts as a bellwether for the industry. The weak performance in stocks continued the retraction to risk appetite we have seen this week. The pair hit a new intra-week low near the 70 level, then bounced upward as the pair begins trading in a downward sloping channel. In Australia, consumer sentiment rose by the most in 8 months for the April period, gaining 8.3% to 92.7. Factors helping to improve confidence included a surge in stocks for the month and the start of the government's $30 billion fiscal stimulus plan, which includes cash handouts to individuals along with infrastructure spending. In a second release, the number of loans granted to build or buy homes and apartments rose by 0.4%. Though the figure was smaller than expected, it was still the fifth straight month that loans grew. Mortgage rates have come down dramatically as the central bank has embarked on a sharp rate-cutting campaign, which has brought rates down to 3%, a 49-year low. Also, the government's recent move to triple the grant they give to first-time buyers is paying off. Nearly 27% of the homes financed in February were taken out by first-time buyers. In Germany, the trade balance showed a bigger than expected surplus in February as a 4.2% pullback in imports outpaced a 0.7% decline in exports. Exports, though, are down 23.1% compared to February of last year, which almost matched January's record decline. German manufacturing orders fell by 3.5% in February, a bigger than expected drop. That follows a 6.7% decline in January and puts orders 38.2% lower than February of last year. It's the sixth straight month that orders have declined. The German economy is being pressured by weaker demand for exports, which is reducing demand for capital investment at home and also causing more companies to lay off workers. The euro-dollar pair fell to 1.3150 overnight, its lowest level in 8 sessions. However, from there, the pair managed to stage a 140-pip counter rally, setting a new intraday high near 1.3310. There, it stalled. European and U.S. stocks pushed into the green overnight, though barely, but that gave the euro enough juice to brush off its weak German data and rise. The euro-franc pair shot up today. The pair set a low near 1.5115, but then rallied to the 1.5240 level. That jump had to do with the appointment of Philip Heidbrand as the central bank's next chairman. The appointment should mean that policymakers will maintain their focus on limiting the franc's appreciation against the euro. In the U.S., sales at wholesalers rose 0.6% in February, the first increase in the last 8 months. The increase in sales contributed to a record drop in inventories, which fell 1.5% in February. A rundown in stockpiles would cause wholesalers to order more goods, which increases economic activity. Wholesalers make up about 25% of all business inventories. The dollar-yen pair fell again today as investors became more concerned that perhaps the worst of the global economic slump may not be over. Those concerns are being fed by reports of weak profits for the first quarter among companies, large bank losses still in the pipeline, and the potential bankruptcy of GM. The greenback declined to 99.50 overnight as Asian markets were sold off, saw an 80-pip bounce in the European session and in early New York trading, but then fell back down as the U.S. session progressed. Fed minutes showed policymakers concerned about a negative feedback loop in which rising unemployment impacts slumping business and consumer spending, which would then turn a weak economy even weaker. The financial sector continues to be strained with credit conditions very tight and financial markets fragile and unsettled. The state of the economy and financial sector prompted the FOMC to increase its open market purchases of bonds and to begin its quantitative easing. In Canada, housing starts rose to a seasonally adjusted annual rate of 155,000 units in March, a much better result than was expected by economists. The 13.7% increase was the first positive reading in the past 7 months. Still, housing prices and sales have been pressured, and a wider rebound of the housing sector may still be months away. The US dollar-Canadian dollar pair saw the pair move in favor of the loonie, setting a low near 1.23 in the wake of the better-than-expected Canadian home starts release. However, from there, the pair moved back up to its opening level for the session. Traders are trying to size up the Canadian Central Bank and whether they will try to move to quantitative easing in the near future in order to stimulate its economy. The fundamental docket is very heavy in the upcoming session as Friday is a holiday in many countries and will impact liquidity. Tonight, Australia will post its employment data and Japan will unveil core machinery orders. Overnight, Switzerland releases its unemployment rate, while Japan reveals a second measure of industrial activity, its machinery tool orders. Continuing overnight, the UK will release data on producer prices, its trade balance, and a leading index. Germany, meanwhile, posts data on consumer prices and industrial production. Tomorrow morning, the Bank of England will conclude its interest rate meeting with expectations of policymakers holding at 0.5%. From the US, we get weekly jobless claims, its trade balance, and import prices. Canada will post its employment change, trade balance data, and a measure of new housing prices. And that wraps up today's broadcast. Thank you for joining us here at cmsfx.com, and happy trading.